What's an ETF? An
Yeah,
ETF
that's
is
what
an
I'm gonna ask.
exchange traded fund. So essentially, it's a fund that let's say, for example, the really well-known ones that actually just about every person's self-directed pension or RIA in the States, you have registered investment advisors. The things they'll push you into over and over again will be ETFs, um, because actually they're very, very efficient. They track the performance of the whole portfolio. It gives you good portfolio management, risk balancing, etc. That's the idea. So let's say the S&P 500. Okay, so the people who run highly efficient ETFs are the ones who can best mimic the performance of the S&P 500 as a whole and reduce as far as possible the inefficiencies of somebody trying to track that, because obviously it weights differently as it moves along. So let's say the S&P 500 makes a 5% gain this year, okay?
Mhm.
Your ETF is probably going to track that at around 4.5% before fees. The 0.5% is going to be a handbrake that comes from all of the aspects that go on within the fund in order to facilitate that tracking. So it's not free to buy and sell shares. It's not free to operate any of the things that allow you to correctly mimic how the S&P 500 is operating. So there's always going to be a degree of loss, much like we talk about the loss of power between an engine, a gearbox, and the wheel. Okay,
Okay.
that
So
transmission
this F
failure
is
occurs.
this F is fund is in if I were to have heard the term index fund, I would have expected something that tracks the S&P 500.
Correct.
ET,
And
what was the ET again?
exchange traded. So what's happening
Okay.
here is rather than me, the market maker, sorry, me, the asset manager making a market, instead I place these instruments, these contracts onto an exchange where every registered investment advisor in the USA, for example, can direct their clients into them. And that's actually a massive, massive audience. There's over 60,000 registered investment advisors in the States, and they're the people who do pension planning, estate planning, etc., for high net worth individuals, people with probably more than $1 million of liquid wealth. The kind of people who can have self-directed investments, etc., within the US system. And you see the same thing replicated in every country. Every country has got its version of a registered investment advisor.
Okay. So, all right. So
And
that
just to be
means that
clear, an ETF is a very, very nice packaged product for such people to sell to their clients. It really obviates any responsibility on their part in a way because it's like, well, I wasn't the stock picker. It's just what the S&P 500 did this year. And
right.
it actually feeds back to something that had me marked as a bold boy in the asset management industry because many years ago I was part of a group who used pseudonyms to talk about what was really happening in financial markets. And one of the things that I called out, which as an asset manager at the time was a bold boy thing to do, but I lived the truth of what I said. Um, so what I said at the time was, look, this 2 and 20 business just doesn't work. 2 and 20 is we charge 2% of the portfolio as a management fee and 20% of the upside as a performance fee. It's not aligned with your investor at all because you're getting 2%
Wow.
whether you're useless or brilliant.
Hmm.
Now, what actually transpires from this, and they used to do this, they used to give a monkey 10 darts and have the monkey throw the darts at a dartboard that contained the S&P, sorry, the Dow Jones Industrial Average 30, the top 30 stocks in America. And it's basically a joke example of random walk theory at work. Because the monkey doesn't know what it's firing the darts at, right? It's just throwing darts at a board. So it ends up with this equally weighted portfolio of 10 stocks. And the scary thing is, those random walk theory, monkey selected portfolios perform better than 60 to 80% of US investment advisors.
That, yeah.
Okay, so exchange traded funds really took off as a means of saying, hey, I'm not the stock picker, I'm just this guy over here who's doing this. And it also allows the whole industry to peck fees out of the system. So the people who run the actual exchange traded fund are picking up 2 and 20. So remember I said if the S&P 500 has a 5% net return on the year, then actually the ETF might only be about 4.5 because of what you would call transmission losses
Hmm.
to mimic the system. And that's before fees. Then there's a 2 and 20 leveraged on top. So 2% of whatever you put in comes out and goes to the management company. And 20% of the 4.5% is deducted. So 0.9, you're now down to 3.6% return, minus the 2% on the money that you put in the first place. So actually, you're probably flat.
We should get back to the business. We're doing it wrong. This is like we're doing hard things. That sounds way
Yeah,
easier.
well, the problem you have is your CEO is the guy who called this out when he was in that industry and said it was wrong.
Yeah, but seriously though, like this is one of those things where even if I was engaged in that, and I think this is probably similar to like when you see something dumb, you kind of just have to say it because it's like there's no way this is going to go on forever. So that means we're kind of in a pre-sinking ship.
Yep.
So you should call it out and okay, so this was cool for a while. Now everyone's doing it and the fees, this is ridiculous. So we're in a pre-sinking ship. Where are we going next? Would be the natural question I would want to ask anybody I was working with, but they may see that as an attack on the system
Yeah.
as
And
opposed to
actually,
like,
exactly to your point, what I was really trying to do back then was call out that, hey, this is not a viable industry. This is not a viable business. Things are going to change. And we need to change before they change, before it's changed for us.
yeah, exactly. It's
Um,
kind of the World War III is going to happen whether we want to or not. Well, the calculus is let's be the one to trigger it so we know when it's going to happen instead of letting it happen to us, which
that's an extreme
that's
version, but it's the same thing. Yeah.
yeah,
Um,
it's that principle of be the initiator rather than get initiated on.
so look, this whole industry is a series of people dining out of the trough. Okay. And the nearer you are to where the feed went into the trough, the more likely you work for one of the very big banks in the investment banking arm. And it all processes down the chain until you
Ooh,
get to the poor people who are investing through their registered investment advisors and buying these ETFs, buying these things. Now, there's legitimacy to the ETFs in that they are genuinely being tracked on how well they manage those transmission failures between the performance of the index versus the performance of the specific fund. And the better they perform those roles, the more allocation they'll get, the bigger they'll get. And then they have another problem which comes into play, which is being able to manage the liquidity that a very big fund would have in the market in that way. That's a
mhm,
whole other kettle of fish. The point is, what you have when you issue an ETF is an extraordinarily well-oiled machine for the distribution of that product into everybody's portfolio. And this is exactly what the Bitcoin ETF was about, and it's what the Ethereum ETF is about. And there are two big fundamental issues I have with it. The first is that Bitcoin is a proof of concept, as
mhm,
is Ethereum. It's a proof of concept. Both of
mhm.
them amount to being square wheels on the axle of a cart. And until we remove those square wheels and put circles in their place, circular wheels, it's just not going to work. So, what are we really seeing happening? And this is the second big issue I have with it. It's about scaling the bag holding approach that fundamentally underpins the entire crypto industry. When crypto VCs ask you, how big is your community? What are they asking you? They're not asking you how many people are buying your product, actively using your product. They're asking you how big is the collection of bag holders you've assembled that we can dump this rubbish on when we've got maximum FOMO underway. because our money is not going to build a product. You could build the product for 50,000 tops for most of what these people are offering. And that's 50,000 if you were using very highly paid engineers and consultants the whole way through. If you were scraping this together, as most of them are, out of programmers that you've just picked up on the equivalent of Fiverr, or just copied and pasted existing tech, which you know very well is one of the diseases that perpetuates throughout this industry.
We're trying to chat GPT it, and now
Well,
nobody
yeah,
knows what do you think
100%.
does?
You know, let's just give Chat GPT $20 and get a whole crypto project out of the door. Okay. So what is the money that's being contributed paying for? It's paying for marketing. It's paying for some of the slickest, most
It is slick, to be fair.
it is. I mean, I read a white paper from one of the big blockchain guys who's making huge headway in the banking sector right now on a FOMO basis with the banks, saying, "Hey, you know, you need to be on our team because if you're not on our team, you're not going to be getting the nice ticks in your boxes for marketing." And it's a marketing exercise.
That's
Um,
almost a with us or against us kind of like,
oh,
rhetorical
it is.
play.
It's pure FOMO, and you know what they basically said is, okay, so we're a blockchain. Okay, we're a blockchain. Good, good. Next. Um, and we are a node in every one of our client chains. Oh, okay. Um,
Yeah, you should automatically go, what is that? Hmm?
yeah, yeah. Uh, okay, I'm good. No, I'm not. No, 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 that doesn't make sense. All right, so tell me again, you're a regulated entity because you're a central counterparty in a traditional financial market infrastructure context, aren't you? God, no, we're a blockchain. No, no, you're one or the other. Decide. Okay, but look, let's put that to rest. That's a whole other day's conversation. The point is, what this industry has become phenomenal at is FOMO marketing. What it has been a complete failure at for at least 8 years is actually innovating and doing anything interesting. So,
Oh, okay. I gotta stop you. Okay, so from what you're telling me, an ETF that represents Bitcoin or Ethereum would be a way for me to basically buy a claim to Ethereum or Bitcoin through a proxy that's tracking their performance, which there'll be some service fee. There's some fees involved in this, of course, but um, why
oh,
would I
no, no,
not?
no. There's a lot of fees involved in this. Let's be very clear.
Okay,
In
well,
order to have the pleasure of being fleeced in a FOMO deal, we're going to leverage the fees like you have never seen before. They're going to be eye-watering. Anyway, go on.
I mean, at least the handcuffs have velvet on them, but
Absolutely.
it makes me wonder what's the advantage of that. Okay, basically what exchanges are doing right now, the crypto exchanges, is providing the same type service where,
No. Okay, so let's make the differentiation.
yeah,
So,
I need to get the difference.
firstly, they're not exchanges. Full stop.
Hmm.
They are single-sided market makers making a book on screen. That's what
Right,
they are. Okay.
right,
An
right. So literally,
exchange
if I
is a
buy, if
multilateral trading facility. On Coinbase,
Mhm.
it's Coinbase's trading facility. That
Yeah,
is
so I give
not
them
the
my
same thing
crypto,
as
I give them my
unilateral.
fiat, and they've got my crypto. And if I want to move that crypto on chain in my name to my actual wallet on chain, they're gonna just skin me. Like the fee for doing that's insane. So the ideal for them
The
is
fee for
that I
doing
give
that
them
is
my money.
insane because how
They
dare you do
allocate
that
me,
thing?
yeah, they allocate me a claim, the crypto that they actually have, that they
Mhm.
could, in theory, put on chain in my name, but almost nobody ever really does that.
Uh, Another day, we're going to talk about the delights and entertainment of rehypothecation, which is where your actual crypto that you gave them on custody is lent out to other people without your knowledge
Oh
or
yeah, yeah.
consent.
There's something in here where, and FTX is doing this big time, but a lot of them are doing it, and it's happening on layer twos now, where they've almost like reinvented fractional reserve banking without calling it that.
Yep.
And there's some sneaky business going on.
It's called rehypothecation, and essentially it's a form of fractional banking. Exactly
Such
the
a,
it's always great talking with you because you identify the reality so quickly. It's fractional banking for assets.
I love that term though, dude. Rehypothecate.
Yeah.
That's a
Well,
really
look,
cool.
The
term.
crypto world didn't learn how to apply very long words that most people don't understand to things to sound smart and get you to buy it without questioning what it is
Dude,
from nothing.
let me
They got it
let me
from,
try to pick this apart though. This is so cool. Not hypothecation, because okay, let's shut the off.
what does
Hypothecation.
hypothecation mean?
Hypothetically, I'm conjecturing something. I'm
Okay.
so
So
I'm
let's get to a nugget point here.
uh,
Every asset is hypothecated in the existing financial system. So,
okay.
okay, the
In
money,
that it's a hypothetical asset that's pointing to a real one somewhere.
yes, which sits
It's
with the Central
tokenized, sort
Security
of.
Depository. So the CSD, Central Security Depository in the US, is called the Depository Trust, the DTCC, Depository Trusts Clearing Company.
You know, so many acronyms, dude. This is
Um,
ridiculous.
and yeah, I keep slipping on that one though. And they actually have about $4 to $6 trillion a year of throughput on the clearing side because every single
How's there that
share,
much money? Jesus.
because all the shares in America that, on the NASDAQ, the NYSE, the ASE, all of them, they are all, they get the actual share certificates in their origin form sit with the DTCC. And the DTCC basically says to the custodial bank, okay, so you have a relationship with us. We will give you this balance sheet saying that you have so many of these. And essentially, the entire system is basically trying to track back to that point and back up again to the exchange and the transaction itself all the time. That's why it's such a complex mess. But we could do a whole other series of videos on this because it's really entertaining stuff.
Oh, this is crazy. Sorry, I just like did a search. Yeah, that's nuts.
Right, so
I'm gonna look into that
rehypothecation
later.
is where you take something you've hypothecated and you reissue it all over again. It's okay. So, what is money? Go back to your example of fractional banking. What is money? Money today is no longer a layer two for gold.
Mhm.
Uh, it's now a fiat thing. It's a thing because I say it's a thing. And how dare
Mhm.
you question me otherwise, right? It's a bit like
Right.
when one of your children says, you tell your children to do something and say, but daddy, you do that. And you go, yeah, do as I say, not as I do, right?
Right. Yeah.
It's kind of like that. It's like, listen, I know the emperor's naked, but how dare you say so? So, um, this is
Every
exactly
now
what's
and then,
happening.
executive privilege sneaks in.
Yeah, but this is basically executive privilege on a global scale from global institutions to us, the poor plebs, whose job it is just to carry the risk.
Well, okay,
So
but to extend the metaphor though, because there is actually a hard point to this. The hard edge of reality comes in when your kid says, "But you do that," and you got to think sometimes. Okay, either I got to relax a rule, or I need to start. I actually got to buckle down on myself some. And you actually have to take that into advisement, though. Sometimes a kid tells you exactly how you're screwed up, and
yeah, but
and they'll just say it too. There's no filter.
yeah, but you're getting into the realms of responsible parenting here. The whole point of how the existing system and the system that the crypto bros would like you to have is that it's not responsible parenting.
Right, yeah, and that's
Um,
my point is that this divorce of responsibility from like everything is kind of a trend. It's a theme within the new whatever
Yeah. So
the new
talk
thing that's
I
being
talk
offered
about the
is
existing financial system privatizes profit and socializes risk. But to your point you're making right now, actually what it really does is it abrogates responsibility.
hmm
It allows you to say, do as I say, not as I do. I, I, you know, try being a guy walking into a bank saying, hey, you know what? I lent loads of money to my friends, so I can't pay my mortgage now. How about you give me a write down? Try saying that. But that's basically what the bank said to the American people, the people in Europe, the British people, etc., around the world in 2009, and they said it again last year in America.
but they said it in a fancy way,
Yeah, but
so it's cool.
that's the key. You have to put on a nice suit, nice tie.
You have to
You
say
know,
something like rehypothecation.
that's right. You need to use long words, and you need to use lots of them in as dense a way as
Oh,
possible. And so, like I say,
Wow.
the crypto world didn't lick this off a stone. Okay. All the same people that were really good at selling Ponzi schemes in the traditional system ended up selling Ponzi schemes in the crypto system.
So okay, so wait, that hypothesizes that um people doing wacko bundle assets that were kind of impenetrable to understand
Oh,
in 2000
stop. You
before
do
2008.
understand that the entire financial crisis was driven by wacko bundled
Oh yeah, yeah.
assets.
Yeah, so like the pre-2008 milieu combined with the same thing that was going on at an even bigger scale. People are like American economic contagion without mentioning the carry trade in East Europe at all. And then the war from Russia that triggered the 2 week reassessment. Oh crap, war actually exists now. Uh, and then unwinding all that crap. Right. But it's an American contagion. It's like, dude, this is a bigger problem than like just America. There's a systemic holy crap. And let's mention Chinese junk bonds. No, like this whole like the level of fakeness is insane. Every airline is a bank now that just incidentally does flights sometimes
Hey,
because
look,
that's how they
copying
maintain their
GM and
essential
Ford.
status.
GM and Ford stopped being car manufacturers 30 years ago. They became
Dude.
pension funds.
Yeah, yeah. Like this is everybody wants to be a bank now. I mean, everybody. And but nobody wants to make like stuff. And if everyone stops making stuff, we're not gonna have any stuff.
ETFs.
Yeah.
So what
So
are
the
ETFs? We've said
yeah.
exchange traded funds, and what they
So how's it
effectively
different
do.
from an exchange? What I mean, like how's it different from buying this on Binance versus why would I buy it on
Okay,
an ETF?
because those aren't exchanges. They are single-sided market makers. So if you're sitting in a
Sure.
big institution who are a responsible institution, like let's say someone like US Bancorp, huge custodial bank in the States, have never played stupid games with anybody else's money in all of the, as long as I can remember. I've never once seen US Bancorp's name on one of the
The wacky sheets.
yeah. Um,
Hmm.
so let's say you're a real institution who are really looking after people's money as well as you possibly can and taking your fiduciary responsibilities seriously. You can't do business with Coinbase, Binance, any of these people. They're not multilateral trading facilities. They are single-sided market makers, and your risk, as you've identified, because you give them your money and you give them your crypto. They have both the asset and the fiat.
Hmm.
All of the risk is theirs. Sorry, forgive me. All of the risk is yours,
Right.
and they have all of the assets. Okay? So if they're doing something that they shouldn't be doing, you're going to pay the price. You, the person who trusted them with your money and your assets.
Okay.
Now, if they were regulated, that would be one thing, because then you'd actually have real insight into the management, or at least somebody has. The whole thing when we talk about trust is that somebody should have the ability to oversee an activity that requires trust. There should be a second set of eyes looking at something saying, okay, so these guys are complying with this reporting, they're providing this transparency, you have this ability to question what they've done and how it's done and how the records have been kept, et cetera, et cetera, et cetera. That's
Yeah,
what
like it can
regulation
be
really
audited.
tries to do. It can be audited. It regularly is. That's what it means to be regulated. But yes, in theory, a regulator is themselves accountable to an elected legislative or executive, one way or the other. Um, of course, we know that's not the truth, but that's another day's conversation. So coming back to ETFs, you asked the question, what's the difference between an ETF and being able to transact directly on an exchange? The difference
Hmm.
is you're dealing with a real financial institution, an exchange like the New York Stock Exchange. That's a real financial institution with real accountability processes, everything. It has the whole thing about how do you get to having an ETF. It requires approval from a whole series of people to say, yes, you can do this, and yes, this is the correct way of doing it, and yes, it's worth having. So an ETF is a highly structured, regulated, accepted instrument that has an entire financial ecosystem around it to accentuate its transmission from issuer, the investment bank who's bought the underlying asset or is managing the underlying asset, or the hedge fund, the asset manager, all the way through to the person who's trying to allocate their pension fund. Okay.
Okay, so this is an actual two-way market when you're in the ETF
Yeah, so
world.
it lists on the New York Stock Exchange or the American Stock Exchange or the London Stock Exchange, any of the big household name exchanges that are real exchanges because they're actually multilateral trading facilities. They're institutions that other big financial institutions have profound relationships with and provide facilitation to and are facilitated by. Okay, so you're basically plugging something into the entire financial ecosystem and all of the organs of sales and transmission that it has, right the way
Okay.
from the investment bank that originate the deal flow, structure the deal flow, and then distribute the deal flow to the asset management companies that then start to transmission that out to their shareholders. And very often the really big asset management companies like BlackRock, how many individuals do you think have got accounts with BlackRock? You could probably count them on an amputated two hands. You would need to have the ability to give them a $250 million check just to be allowed to buy a share in a BlackRock fund. So who buys them? Big pension funds
Big
that
pensions,
you
right?
put your money into. Big asset management companies, corporate governance, corporate pension funds, etc. These are the things that are putting money into the likes of BlackRock and so on. And in turn, they're then creating these structured products. So an ETF is a structured financial product that fits in the existing financial system and benefits from all of the capacity to distribute that the existing financial system has, which is phenomenal. And it is also
Okay.
a phenomenal means to give lots of people more feed into the pig trough that allows them to get their food and puts you, the end investor, the retail investor at the very bottom of that trough. You, the one who actually earned the money to put into the system, get the least out of it. Now, that's one of the big inequities of the existing financial system as a whole. But the specifics of what's going on when we have ETFs for Bitcoin and Ethereum, I touched on this earlier. Neither one of them can ever really succeed, nor should they. That's
Mm-hmm.
a big issue. So their actual intrinsic value is
Right,
zero.
but so they're becoming the crypto flavored versions of meme stocks now.
No, I wouldn't go that far, because that's a slightly different track.
So what
So,
exchanges?
so,
What
so
is
go
an
back
ET,
to what
what's
venture capital companies ask. If you have a crypto project and you go to a
Mhm.
venture capital company, what's the number one metric by which you're valued? It's your community, as they call it.
Mhm.
How big is your community? How engaged are they? How many of them have signed up to a wallet or to use the service? The actual numbers of use, the real numbers that a financial service person should look at, like what's your revenue, how much of it's recurring, how much of it is lumpy, etc. That's all out the door. All the traditional stuff that people would look at in terms of understanding value in markets, gone. It's how big's your community, how engaged are they, what financial commitments have they made? Because what they want to know is when we put a chunk of money into you to pump this to the moon, because number go up, and God, look at your economics document. There's no economics in there. That's fantastic. This is just a recipe for how we put the number to the moon.
This
Number
is
go up, right?
actually true.
That's
It's
exactly,
actually
I'm
true.
just telling the truth here, right?
Oh my God.
So
Okay.
what they want to know is how many bag holders have you got? And how can we make sure that they're holding as big a bag as possible when we and you, Mr. Founder, jump out the window?
Okay.
Right.
All
So
right.
that's the small scale version. That's the layer two, me too joke thing. That's the meme stock. They're the meme stocks. Okay.
Mhm.
Because the reason why I would say it's not a meme stock thing is meme stocks don't really hurt that many people because
Mhm.
on the face of it, they're ridiculous.
Right, right. Well, and the people getting into meme stocks are usually getting in them as an attack on, like they're not really looking at it going up for real, for real. It's that's
It,
part of the joke. But
it's yeah, but
what I mean, what I meant by that is
it's
that
evidently ridiculous. So
right. But my point is that like the ETF world lets So what I meant by meme stock is you're saying that Bitcoin and Ethereum wind up being exposed to like legit exchanges, like, you know, ASE and so on, the
And
same way that meme
they end
stocks
up in
are.
your mother and father's pension fund, in mine.
Right, yeah.
They
So
end
like
up they
this
end
is
up
stuff that's
being in the
buyable
school
on
board
Robinhood now.
funds. Yeah, the point of it is this is weaponizing your ability to create a multitude of bag holders. So basically, what's going to happen? What happened with the Bitcoin ETF? Why was the Bitcoin ETF such a big deal for the Bitcoin whales? Because it meant that they no longer had to play the game quite so often in the crypto world, which was much harder for them to do because it's that much more transparent, which is a flaw, not a positive in the crypto world as far as they're concerned. Okay. People
Ooh.
can see that the actual transactional flows are the same wallets. They can
Mhm.
see that there's just, what's the
Right, but
phrase?
this is like an opacity barrier
Right. Uh-huh.
between which is kind of how exchange the crypto exchanges are too. You can't see because the stuff inside the exchanges is not on real wallets or like notional
Uh,
wallets.
yep.
So when if I send you money, if I send you like specifically, if I send you USDT or Bitcoin or something like that inside of an exchange, that's a notional transaction. Never really hit the chain.
Mm-hmm.
They'll start charges a whole bunch, um, but yeah,
Oh,
that's not even a real transaction. It's
no,
a notional
nothing
exchange between
moved.
us.
They have a ledger they've updated, which by the way, nobody oversees, just them. You have to trust them totally, even though they're not regulated in any way, shape, or form of any meaningful way.
Right.
Um, yeah, all of the above. But what's happening with this is instead of look, if you're looking on the exchanges, yes, you can have all of this palaver go on. But if you come off the exchanges and you're actually looking at wallet to wallet transactions, you can see that it's the same wallets, right? So that's why
Hmm.
they wanted to move to the exchanges and not have peer-to-peer transactional frameworks, as blockchain would lend itself to very, very easily.
That is weirdly sneaky.
It gets sneakier because now, if you go to the ETF end, what you end up with is a massive buy-in to Bitcoin from, let's say, BlackRock. BlackRock did the Bitcoin ETF. I think it was BlackRock. Pretty sure. Um, Whoever it was did the Bitcoin ETFs. They've done them, and they had to go out and buy Bitcoin, or at least they had to have a relationship with somebody who has Bitcoin that says, "I'm willing to give you Bitcoin if you call upon it." Which is a whole other no, that's a whole other layer of how the existing financial system works. They're called asset gatherers. So asset gatherers in the existing financial system very often lend the call upon their assets to financial institutions that are trading them. Let's not get into that because it's a whole other world, and
I
we could
thought
be.
that was the handsome guy of the group that you sent into the bar first to check it out. But
Oh, no, no, no. This is a whole other world of fun that we could get into for days. Um,
dude,
so
okay.
it's really hard to stick on the ETF point because there's so many entertaining worlds that it touches into and opens
There,
up.
yeah, there's so much adjacent clownery going on, but that's paints the whole picture of like how like what was the impetus behind this?
Okay,
Maybe it wasn't just getting this into
but let's focus on what it really is. An
right.
ETF is a very structured financial instrument in the traditional financial services world that benefits thereby from the incredible capacity of our existing financial system to distribute buy-in, to
Okay.
distribute and profit from buy-in, all the way from large institutions right the way down to the pigs at the end of the trough, the retail investor. And by
Right.
retail
Look,
investor, I
right.
do not mean your parents or mine. I mean people with $1 million or more to invest. If you are a true retail investor, you don't even exist on this radar. You are merely going to be you'll have a pension fund, but you won't have any say in it whatsoever because you're far too stupid to have a say in it. We'll just leave it to these people. Anyway, before we get into
Right.
that topic, which is another one altogether, um,
This is a crazy topic.
if you have a huge amount of Bitcoin or Ethereum, how do you get rid of it? How do you sell it? Because in the existing system, your limitations are liquidity. Remember I said earlier, I was talking about massive ETFs, and the more successful they get, the bigger the problems they have are, because actually when you have a million shares in Dell, it's really hard to dump them in the market without moving the price.
Yeah,
That's
right,
actually
right.
not true. A lot more than that will trade, but you get the idea that
No, but
there
if
comes
you
a
are the
point,
market,
yeah, there comes a point where you actually force the market to move because of your
mm,
actions. So your actual liquidity is not what you think it is. Your price is not what you think it is. You could do a mark to market, but that's not the price at which you'll get out. Okay.
mm,
So I can tell you lots of fun stories about seeing how that was manipulated in the markets from back in the day when I was on the trade desk. But
mhm.
that's another day's discussion. So if you
Well,
have a
this
lot
even
of
goes back to
Bitcoin,
diaries of people trading on the London Exchange or during Tulip Mania and so on. There's diaries from people
yeah,
discussing this exact issue where I got in too deep. I cornered the market, but then the market fled. Now I'm just like, got everything. Whoops.
yeah,
Um, there's wild stories like this that you kind of have to go. You have to find someone who's familiar with the history to tell you where the right books are to find this. But um, it's like all this stuff has happened over and over and over, but it's a bit
the
arcane
wild
to look it
part
up.
isn't the story. The wild part is that we continue not to learn the lessons of those stories.
Yeah, right.
So
And yeah,
think of it like this. You're sitting on a mountain of Bitcoin. You've been playing this game since 2014, where you push the price up, you get lots and lots of chatter, and then you are selling into the rise. And then everyone figures out that there's just no volume left in this, and it's all hot air, and it goes ooh, like a balloon letting out the air. And it's a bit like I said in Davos at the start of the year. They talk about rebuilding trust, and I said, well, it's a bit like a balloon, a party balloon. You're going to blow it up so many times before it loses shape. Well, that's the
hmm
problem the crypto industry has. The market that it's captured and the one that it's very expensively acquiring through all the massive marketing that it's been doing. Billions have been spent on marketing this world. If Coinbase or Binance spent as much on innovation as they did on Super Bowl ads, you and I wouldn't need to do what we're doing.
yeah, no, that's true. That's
So
uh,
so
well, it's just thinking from my perspective, I'm thinking of like there's like a couple of cures for cancer and a few space programs absent from the picture here that's just gone into not doing anything important at all, which blows my mind.
so if you're holding a large amount of one of these assets, you've basically got a party balloon that's been blown up too many times, and it's becoming really expensive to blow it up again. To find those willing fools to take your bag the next time you dump Bitcoin is becoming really hard. Okay.
Yeah, I had a girlfriend like that too.
Look, do you remember when Elon Musk came out saying that Bitcoin was the greatest thing in the whole wide world? And the
hmm
price absolutely took off.
mm
And then a few months later, he turned around and said, it's no longer that good an idea. We're out now. Now, they still have some, but they offloaded a lot. And I believe they offloaded a lot into that pump. I can't prove
mm
it, but that's what I believe to be the case. And that's what the whales in crypto have been doing for a long, long time. The
mm
big difference between the existing financial system and the system they would like to implement is that they haven't yet found the means to socialize risk that the existing financial system has. We saw it in 2008. We saw it again last year and the year before. I think it was last year the biggest financial bailouts. The bailouts of those banks in California was so big it actually exceeded the European bailout from
Yeah, that was either
2008. Was it
yeah, I
22
think
or
that's
23?
2023.
23. It was 23.
2022 to 2023, but yeah.
Yeah.
It's but yeah, the scale of the bank collapses in just California had been bigger than the European cascade of 2008, which
Yeah.
is and then nobody in the financial press want to talk about it.
Of course
Just
not. Yeah, because yet again, all the risk got socialized. What is an ETF? Highly structured financial instrument that allows you to permeate and access the entire financial distribution network. Every single RIA in America is going to be telling their clients you should have some exposure to crypto without knowing an iota of what this is. One of the core rules of investment is invest in what you know. If you know nothing about something, don't touch it. We're going to break that rule because we're going to give you an ETF. And ETFs are trustworthy and ETFs are good. But what are they to the blockchain whales?
That's carry trade rhetoric just carried over.
It's all the same thing. Look, there's no original marketing in this space. It is rinse and repeat. All of
Wow.
the things that are being said, rinse and repeat. It worked the last time, and people are still too stupid. Look,
Meat
I
ETF.
look at these ETFs as being industrialization of the bag holding process that crypto VCs have engaged in for the last decade.
Right.
It
Okay.
is
So,
industrializing that entire process, and it's doing it. It's going to put crypto on the books of everybody around the world who has access to the existing financial system and has the ability to direct investments in that system, including those who do not, who will end up just getting it anyway. This is a mass bag holding operation. And in fact, the Bitcoin crowd was so flush with their success in the biggest bag holding operation going in crypto that they're now advocating central banks taking crypto onto their balance sheets. Central banks will be better off investing in other illiquid instruments, like, for example, how do we really solve energy? Let's build molten salt reactors. Let's fund fusion. Let's get hydroelectric dams built back up again in Switzerland, in France. No, let's do some sensible things with something. No, let's go sticking it into an asset that actually is simply a square on an axle. It is a wheel that cannot rotate.
this is so the way that I kind of saw exchanges, the way that they operate, where they take my fiat and hold the crypto in trust for me and so on, was that and facilitate those trades where if I send you, as long as we both have a Coinbase wallet, like that's how a lot of people trade crypto to each other.
Yeah,
Is
it's the
they
same as
don't
me
they don't
sending
want your
Revolut
real
money to my wife. It's not real money. It's just
yeah,
Revolut make the balance sheet on my app change by X amount and make hers change by X amount on the other side. It's not
right.
real. The money is,
Right, but
it's
that
not,
solves
actually, they
the
don't even have the money. It's in a real bank over there somewhere.
right, but that that masks over the problem of the effective transaction rate of like 3.9 per second or whatever, that there's no possible way Bitcoin could actually function at uh, as a global currency. Um, so in a sense, there's like a layer two aspect to what the exchanges had affected a lot before there were such things as layer two. ETFs wind up like putting that on steroids in a whole
Correct.
different kind of way.
It's basically, so earlier on in the conversation, I said the existing financial system privatizes profit and socializes risk. It abrogates responsibility for those who are actually benefiting most from the long-term outcomes. Okay. And I said the great jealousy of crypto isn't that they want to replace banks in order to create a more equitable system. It's that they want to replace banks in the sense that they want to socialize the risk and privatize the profit. And ETFs are basically a tool for them to do that. And the great difference is if you buy an ETF for gold or an ETF for oil or an ETF for the S&P 500, you're buying something that actually has a real value.
Mm-hmm.
Whatever happens to gold, it has a premium on it for its so-called flight to quality nature. Okay. But it also has an industrial use. So no matter
Mm-hmm.
what happens, it has a price, and that price is not zero.
Correct.
If your asset relates to a blockchain that isn't a blockchain, you cannot tell me that Ethereum, especially now it's moved to a proof of stake, anonymous proof of stake. And if you want to know about that, look at some of the other videos we've done about this. That's not a
Yeah.
blockchain. That's not an operational format. Never mind the fact that it is profoundly flawed. Its move to proof of stake didn't increase its capacity one iota. It remains slow and expensive. It's also profoundly flawed. EVMs are dangerous, solidity is worse. The reality is, it isn't a functioning blockchain. Neither is Bitcoin. 3 transactions per second is irrelevant. 3
Mm-hmm.
transactions a second is the train station here in Maynooth at 5 to 9.
Right.
Now, there's three turnstiles. That's all it needs to be. Three turnstiles and a flood of people coming onto a train or off a train. That's three
Hmm.
transactions a second. So you have two assets that relate to two things that amount to being squares on an axle pretending to be wheels. And at some point, they're going to be replaced with circles, actual,
Hmm.
what we think of as being wheels. We're building the Gajumaru. It's a circle. It's the answer to that question. So what then is the value of Ethereum? The value of Ethereum is zero.
It's all in the narrative, yeah.
The value of Bitcoin, look, I'm not so negative on Bitcoin. I think that it may have some value to some people, and it may continue to have a value that is not zero. Because
Hmm.
unlike Ethereum, it doesn't rely upon people seeing it as being more than a store of value to be a store of value, albeit one that is not remotely at the prices it sustains at the moment. Um, and I don't think it was ever intended to be that. It was intended to be a proof of concept for how to create an alternative payment system. That's what it was intended to be. This idea of it being a store of value is where it evolved to be when people realized in the Bitcoin whale camp that they couldn't keep sending the narrative of it being a currency because it plainly wasn't. So they just moved to a different objective. And to
Hmm.
some extent, they may make that argument, but you can't make that argument with ETH. Name a
Hmm.
project on in the Ethereum ecosystem that has done something useful other than raise funds. You can't.
Yeah.
There's tens of billions gone into layer twos to scale Bitcoin. Oh, sorry, to scale Ethereum. Now they're moving to Bitcoin. Why? Because they want to ignore that the underlying problem is so profound it can't, it just shouldn't be the solution. You need a new solution, not a fix to hide the realities that actually undoes the entire point of decentralization and forces you into trusting an unregulated, irresponsible body.
Hmm.
Um, so look, my my really huge objection to this is we are perpetuating the system of privatizing risk and privatizing profit and socializing risk. This whole drive to have an ETF for Ethereum is even more egregious than the one for Bitcoin because ultimately Ethereum has a long-term value of nil. I'm not
Hmm.
going to make the same statement for Bitcoin, but I am very anxious that so many people who have no comprehension of what they're actually talking about, because most people in blockchain don't even know what a blockchain is, never mind people outside of the blockchain community and outside of the blockchain world who actually do know what they're talking about.
Hmm.
There's no way they should be given access to or have pushed into their pension assets that really struggle to meet the definition of being an asset.
Right. So,
And don't forget, all that money that isn't going to innovation, where is it going? It's going to marketing. And marketing is not just telling people that, it's not just a Super Bowl ad saying, hey, come and trade on whatever exchange. I think the one that put the most into it was Sam Bankman-Fried's outfit, wasn't it? And I believe a
yeah,
famous American football
FTX.
player was
Oh, dude.
Tom Brady
Yeah,
was
yeah.
their
There's a
front
bunch
man.
of stuff around it. Yeah, that's right.
Yeah. Anyway, look, the thing of it is, I don't believe for a second Tom Brady or I can't remember whether it was Matt Damon or Leonardo DiCaprio was the other face. I don't believe for one second they really knew what they were pushing. They were just very happy to take an incredibly large check to push it. But
Hmm.
that's the top line piece of the marketing game. What you're not seeing are all the surreptitious discussions and sponsorships and jobs and all the other forms of bribery and corruption that are going on in the background to continually drive this agenda. I'll give you an example. Um, 2018, I started coming above the parapet with what I was doing at QPQ. I knew. And I contacted a reporter in the space, allegedly a reporter. Now, I'm a little bit old-fashioned, so I think words mean something. And I thought reporter means report, to report, that you are somebody who observes a particular sector of the world and reports upon what's happening so that others can understand events. Behind that, you have an opinion writer and so on. But the point is, a reporter's job is to report. So I contacted this
Mhm.
reporter and I said, look, we're doing something really interesting. It's really transformational. His response was, how much are you going to, so what's in it for me? And I said, well, I'm giving you the scoop on the information that's coming down the track. No, I mean, you need to pay me, basically, was what it came down to.
So
You,
he's a paid shill. He's soliciting a payment
correct,
to produce the story.
correct. But you needn't think that the traditional media are any different.
Hmm.
Why?
Well, obviously, look at the
Okay, so
things we've already been
look at
talking about
GB
to
News
explain.
in the UK. A big campaign to stop them getting any advertising revenue because they had the temerity to challenge the existing cabal of the ITV News and the BBC News and Sky News. So those three were pretty well controlled. But here comes GB News saying we're going to really talk about things and we're going to go outside the M25 or what the Americans would call the Beltway.
Hmm.
Um, Massive campaign to stop them getting any advertising. So whilst the crypto reporter was really just a shill, so is the existing mainstream media because they're not going to say or do anything that dries up sponsorship.
Right. Yeah.
Do you think that mainstream media are going to challenge any of these things when they rely upon all of these same institutions to pay their bills through advertising and sponsorship? No.
So okay. So we've got uh, a migration from the crypto exchange based number go up world to now that on steroids with pension fund exposure, general market exposure across anything that's like traded in the stock world, basically anything that's traded in the securities world is now this is open to an open avenue
Well,
that's been
not yet. But this is what I'm saying to you is all the marketing muscle is coming behind this.
right.
All right.
Yeah,
So
and they've got a well-oiled marketing machine that includes what should be unbiased, trustworthy media, but is just like parrot pieces.
and
It
it's a self-perpetuating machine. So LinkedIn is now filling up with posts talking about the Ethereum ETF. At least it is if you're in our industry.
mhm,
Maybe if you're in the car parts industry, you're not seeing this stuff, but I am.
mhm.
And
Well, I imagine
it's
X is the same way.
it's part and parcel of this whole thing that the agenda is being driven behind closed doors, where highly paid law firms and publicists and PR firms and marketing people and executives from the big crypto whales, big crypto exchanges, etc., so-called exchanges, are in talking to the people who regulate the regulators, the legislators, the most corruptible people in the world because they're politicians. And as we all know, politicians these days don't actually have a single fiber of morality. It's just what the latest Gallup poll told them to say, with a slight sprinkling of marketing penmanship.
Hmm.
That then equals a policy. They don't have principles or policies. So these people, the most corruptible people in the world, are sitting with the people with the biggest checkbooks who are most willing to write very large checks. So, Mr. Everett, would you like to get re-elected? What does your election fund look like? We can put together a super PAC and blah, 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 right?
Right.
This, the real, the really egregious, profound part of this is not on the top line. There's a lot on the top line, but the really dirty part is happening below the line, and it's feeding up. So what happens? This becomes a piece that's in the news. The idea starts getting put out. Suddenly, everybody who thinks that they're a crypto influencer needs to be talking about this, because if you're not talking about this, you're missing out on the numbers. Why did we start doing this video? Because it's a very topical point, and we thought we should address because we have a different point of view. But at the end of
Mhm.
the day, everybody is talking about this now. Everybody in this space is talking about this. This is how
Dude,
it germinates. This is how it gathers momentum and becomes an accepted credo.
which means that Okay, so that also includes that this weird dynamic where a kernel of effort winds up spawning that's got a corrupt motive, winds up spawning adjacent efforts that magnify it from people that aren't even bad actors or just caught up in the cycle.
Correct.
Um, which is exactly how I reread recently the uh, uh, McKay's account of the South Sea affair, and it reads extremely similarly to this. In that case, and this is before, like way before the end. This is, I think, probably before Telegraph. Um, I forget the exact year the South Sea affair really exploded, but this is the paper traded London exchange. Um, and within a day, prices, the book prices were going outrageous places. That had a final flare up that collapsed, I believe, within a summer. Which makes me wonder if the ETF flavor of Bitcoin, if there is, or not Bitcoin, just Bitcoin slash Ethereum, the ETF efforts that are going on, when those come out and they explode, which I'm sure that they will, it's probably impossible for them not to. Once those are exposed to anything that pressures them in terms of, like, back to the roots, what is Ethereum actually worth as a chain? Can it perform? Does it have a money function at all? If that turns out to be pressured by any kind of competition, I kind of feel like this is a crescendo before the end, because this can't go on forever.
Yeah. So,
These feel like
okay. All right.
first
So
pump,
let
first
me
dump.
let me read out a headline for you.
Okay.
This is from Bloomberg. Record Bitcoin ETF outflow buffets BlackRock Fidelity funds. Investors pulled 564 million from Bitcoin ETFs on Wednesday. Cryptocurrency on pace for worst week since August last year. Give me a date. Is this before or after the halving?
After. Wait,
Correct.
August last year?
Correct. No, no, no,
Yeah.
no, no. August last year was its worst week since August of last year. This was just before they managed to shake out all the people who might be hodling that shouldn't be because you didn't earn the right to be a whale, and then started the pump, right? So the pump is all running toward the halving. Boom, 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 boom. Same thing happening again that's happening with the ETFs, which is start getting this into the media, start getting this into the talking points, and all of a sudden you get a ripple effect because everybody who thinks that they're crypto evangelists, whatever, they're all putting out the same things, talking about the same thing, and driving the same agenda. Bitcoin's going up to the moon. Halving. The halving is everything. It's all going to be amazing. The idea of the halving actually isn't that at all. But let's put that to one side because God
Right.
help us that we would use logic when assessing a situation. Um,
How did that become an event in people's heads anyway? I don't get it.
well, that's a whole other day's conversation. But the point is, 2nd of May is the date on this article. Record outflows. This whole thing, if it wasn't obvious that this was a bag holding operation at scale, I just don't understand how people can't see the obvious truth that's parading in front of them. Bitcoin is not a payment system.
Hmm.
Read the white paper. It was never intended to be anything other than a proof of concept payment system. And if you doubt that, read the goddamn paper.
Hmm. And it from that perspective, it hit it out of the park. It proved, hey, this can work.
It was
Now
fantastic.
let's
But
make it,
just because a proof of concept is fantastic doesn't mean that it's the end.
right.
What do we talk about in terms of the Gajimara? We tell people it's a beginning, not an end. What's the beginning?
Hmm.
The beginning is an actual blockchain that really works with a real cryptocurrency that actually works. That's your
Hmm.
beginning. That's your beginning, not your end.
Hmm.
I'm sorry to shout, but I'm furious about this.
It's
It profoundly disgusts me because it is everything that is wrong with the existing system being taken outside even the grace of some pretense of oversight that we have with regulation and legislators who supposedly regulate the regulators.
Well, not to mention that one of the core ideas of, okay, we're going to make this a currency that no individual organization can debase on their own
Uh-huh.
because it's distributed and anonymous
Uh-huh.
and trustless. So trustless and anonymous, which comes with a whole set of technical penalties, which are tricky to mitigate. And they found a way to kind of make it, well, again, it was a proof of concept in Bitcoin itself. But one of the backstops to that was that even though this is trustless and anonymous, the ledger itself is open,
Uh-huh.
which means that you can't exactly audit in the traditional sense necessarily. But once you've identified actors in the system, you may audit to some degree, but you can always, all the money winds up being traceable to its origin at least.
Mm-hmm.
And the ETF thing, like the exchange is through that kind of for a loop already, but the ETF thing, it's sort of like the ultimate level of tossing that
Yeah,
insight
so look,
away.
you asked a question earlier, and I gave you a technically correct. I gave you the Microsoft answer, technically correct but useless, right? Um, because I said I differentiated them in terms of the regulated operations that they exist within, et cetera, et cetera. As you were talking there, it dawned upon me that the real answer to that question was this. Um, in order to get you to buy a crypto asset through one of the so-called exchanges, single-sided market makers with excellent marketing to pretend they're an exchange, they have to get you in the door. And they
Mm-hmm.
have to get you to give them your yen, dollars, francs, euros, pounds, drachma, whatever it is you have, right? They have to get you to part with that. And then they get you to buy something on their word that it exists and that if you were to call upon it, you could have it.
Mm-hmm.
Obviously not true, but and if it were true, all of these so-called exchanges would be actual exchanges and be regulated as such. But let's not get down that. That takes a lot of muscle, a lot of money, a lot of marketing is required to get you to pass through that portal.
Mm-hmm.
It takes not just the above the line marketing, it takes all the surreptitious stuff. It takes getting the guy in the pub or the cafe to tell you this is a good idea. Right? That's a that's a square wheel again on your cart, and it takes a lot of power to move that. Yes, a square can rotate, but it takes a lot of power to make it do it.
Mm-hmm.
If we can go down the ETF road, we dispense with the need for any of that marketing. All of that cost is gone because now you have one of the most well-oiled distribution machines in the world essentially operating to do your job for you. That is now, you get an ETF, you put your Bitcoin into it, you get dollars back, yen back, whatever it is that you want. And BlackRock, Fidelity take their ETF and run with it. And it gets distributed to every single person. You may not know that you have exposure to Bitcoin right now, but if you have a pension fund that is not self-directed, which is true of the vast majority of people,
Mm-hmm.
might be your state pension, for example. You have Bitcoin. If these people get their way, you will have ETH in your portfolio. And the truth of it is, Bitcoin's value is very, very low. Its intrinsic value is between a group of consenting adults, probably in the same sort of way as Monero or something like that. It's vanishingly small because it
Mm-hmm.
doesn't have the ability to be more than a proof of concept. And all the so-called layer twos, the runes, the what's the other
The runes,
farce that
right?
they've come up with? There's runes, and what's the other joke? It's not.
I
It
don't.
shouldn't be a joke, but it is.
It's
Ordinals.
ordinal. That yeah, there
Yeah.
it is.
Okay. So all of these so-called layer twos, which are really just trying to pretend a square is not a square. You don't need any of that anymore. All you need now is you've got an ETF. So it all just flows because now every single pension fund advisor in the US, they're a registered investment advisor. In the UK, they would be a high street pensions and financial planning consultant. These are the people who call to your door and say, "Hey, can I sit down with you and do your financial planning, your estate planning, your pension planning, etc." If you have more than 100,000 in liquid wealth, you inevitably have a relationship with one of these people. Well, they're all going to be selling you ETFs in Bitcoin, ETFs in Ethereum, which have a net future value of zero.
Mhm. That is that's a wild idea. So, but this is definitely going to be a a component of bundled financial products that people won't know that they're even getting into because it's fund directed. Um,
Correct. And
which
that's why
which makes it
I
feel
get
like,
so angry about it because
yeah, it feels
it's
like this
one thing
inflection
to
point
fleece
before a weird
somebody,
ending.
right? It's one thing to fleece people in full knowledge of what they're buying. They
Hmm.
may not understand what they're buying, but you've told them it's a cryptographic asset. You've told them how its so-called economics operate, etc. And they've made a decision like a big boy or girl to part with their cash. What we're talking about here is an egregious means of privatizing the profit from the pumping of Bitcoin and Ethereum and socializing the risk. If
Right.
you're not angry about it, you shouldn't be in
Because we
this
can't let those
industry.
pension, yeah. So the way this gets socialized, just for to cover part one of the methods this gets socialized is the pension funds, if they are the firefighters' pension of the San Francisco Fire Department, we can't let that fail. So
I
if this
just,
component
when
of
you
it,
said that, I
if
just got the YMCA thing in my head.
yeah,
The San Francisco firefighters. Anyway, sorry, go on before we get
yeah,
into dangerous
so we can't
territory.
let those people go like broke
Yeah.
because that would be a tragedy. Um, the state pension fund of for whatever social workers that have retired in Oregon, they can't lose a big chunk of their pension just because ETH went under. Um,
No, they're not.
so,
They're not. This is the whole point. Okay, so portfolio management theory
well, I mean, the
would
government's
say
going to
that you
step in at
don't,
some point.
not necessarily, because right, portfolio management theory says that you should have a diverse basket of assets that you are exposed to, and you shouldn't
Mhm.
really concentrate wealth in any one thing. Um, one of the reasons why the banks had the problem they
Well, I
had.
didn't. Now there's Bitcoin and Ethereum.
No, yeah, but so let's say that um, no RIA except one who's desperate to get an orange jumpsuit on at some point in time, or is a crypto contaminated lunatic who will definitely wear an orange jumpsuit at some point in time in their future, um, is going to tell you to put more than 2 to 5% of your asset base into these things.
Hmm.
So it's not going to bankrupt you, but it's going to make you a bit poorer. It might make you feel
Hmm.
good in the short term, but long term, it's going to make you that little bit poorer. And in this way, the socialization of risk is seen as being acceptable. Now, when the banks socialized risk, what was happening there was a concentration of assets, a
Hmm.
concentration of rubbish driven by low interest rates. And low interest rates artificially maintain this idea that money has no value, which the central banks then proved by printing money like it was going out of fashion in response to the collapse.
Hmm.
Actually, Elon Musk did it very well the other day with the rules around monopoly that when the bank runs out of money, it can just create bits of paper and circulate them instead.
Hmm.
Um, that's basically what happened. Uh, but the socialization of risk and the privatization there were very obvious because this was really big. Concentration in commercial property, commercial development, you know, land banking, and um, the development of massive retail and office and industrial and housing. Um, and very often in that environment, it was trying to sell. whatever it could to whoever it could, with almost a number go up type mentality that land prices will never go down. So when
Ooh, that's a really foundational assumption too of the current system, which is expansion forever, with no plan for if there's ever a real contraction.
yeah, but so are we going to see pension funds and people made destitute as we did in the 1930s? Um, Many of the people who attacked what happened with what was the name of that video company in the US that they went after the pension sorry, the hedge fund over. They were shorting the stock, and so these people bought tons of it just to screw
Oh,
the hedge fund over.
oh, the GameStop and AMC.
GameStop. So all of that was driven by anger because the
Hmm.
people who were behind that told the stories of their parents eating dog food so they could afford to eat as children to eat something.
Hmm.
Um, and so that socialization of risk was really obvious and really overt. This is much more subtle because they're not going to get more than 2 to 5% of your portfolio allocation. Whereas if you think about your cash reserves, they were 100% exposed to massive commercial property illiquidity and a bit like you become the market, right?
Hmm.
Um, so are we going to see people unable to feed their children without making dire compromises elsewhere in their lives as a result of the ETFs of Bitcoin and Ethereum? No. Um, does that make it morally okay? No.
But it puts the category of the subtle socialization of, how would you say, asset aggregation, which is not unlike the way that in the same way that inflation acts as a tax. It's unrepresentative.
Right. But look, why do the rich get richer and the poor get poorer? Because of socialization of risk and the
Hmm.
privatization of profit. That's ultimately what all of this comes down to. And if you're in blockchain for the right reasons, you've got to see that as the great moral sin that we're actually fighting against.
Yeah, exactly. That was like the whole point, was to get away from this, which was the reason that the Nakamoto white paper really lays out this problem about the debasability of money. And they're really just pointing out the Fed problem. This is like the extended, this is the same problem with derivatives. The moral problem with some derivatives is showing up here, but it's a derivative problem in a whole different way. Um, then I never, This is a very weird kind of left field problem. I never would have thought of ETFs, which leads actually to two. I have two remaining questions for you. One's really easy. One's maybe a little bit require some discussion. But the first one is: Are there uh, is there any such thing as an ETF for like the U.S. dollar?
Yeah, it's the dollar index.
Now, is that a forex thing or is that like an ETF?
Uh, Bear with me. It's been a long time since I looked at these things. I can't remember off the top of my head. Um, there are certainly currency ETFs, and are there US dollar ETFs? I don't know. I think there was one, but to
Okay.
answer the question,
Wow. That's
there are currency ETFs that would probably be a basket of currencies in some way, shape, or form that's probably very dollar heavy, in much the same way that the S&P 500 is very top 100 heavy.
okay. Okay. That's pretty wild, though. All right. So that's the thing. Um, the second question would be, um, why are why would a forex not carry Bitcoin other than maybe the complication that they don't have a way to actually get
Okay.
Bitcoin and
So
give it back without these
this is
giant
relatively
transaction
easy.
fees?
So back in the days when I was a trader, if I wanted to go from Swiss francs to Japanese yen, I never went from Swiss francs to Japanese yen, ever. It was a really dumb thing to do. Why is it a dumb thing to do? Because the liquidity was wafer thin, which meant that I couldn't move a volume, and it meant the spread was really wide. So if
Mm.
I went Swiss francs to Japanese yen, I could be looking at 10 points in the spread easily. And if I had volume, I could be looking at
10 points being 0.1%.
no, 0.001. It
0.
sounds
Okay.
small, but when you're talking about vast amounts of money, it's
It's
huge.
not. Okay. If you're, yeah, if it's enough money that you're
It's
talking about in
it's a
percentages, then
basis point, right? A point is a basis point. Okay, so
okay.
a 50 basis point move is so 25 basis points is very often how you see interest rates move, right? So if I'm
Hmm.
doing a 10 basis point spread on a small trade, I'm probably looking at 50 points on a big trade for something that illiquid. So what I do instead is I go Swiss franc to euro, which is heavy liquidity. I go euro to dollar, heavy liquidity again. And then I go dollar to yen. Now, I have
Okay, I see.
done transaction one to euro, transaction two to dollar, transaction three to yen. And that was more efficient than going there to there.
Right. Because somebody else is doing this other route.
Well, because everybody else is doing this other route. Those
Right.
each of those pools have got massive liquidity. So I'm basically going from liquidity point to point to point to point. Now, let's say I want to go from US dollars to Bitcoin. That's probably the biggest liquidity pool there is, but your pool is still wafer thin.
Hmm.
Okay, so if I actually wanted to move any real volume in that, let's say, for example, I'm a pension fund. Oh, I'm an insurance company. Um, a great hurricane has just hit New York. I'm looking at $1 trillion of weather-related claims. I'm going to have to liquidate a big chunk of my portfolio. Can I liquidate $100 million worth of Bitcoin?
Mm.
I don't know. I know the answer is no, but I don't know how much it would move the market. But I'm pretty sure if you went to dump $100 million worth of Bitcoin into the market right this second,
Right.
you would
It would
watch the
move
graph
it
do
moves
this.
something.
You'd
Yeah,
move
right.
really fast, right?
Hmm.
Because actually the volumes available are thin. Now, big players aren't buying at anything like these prices. They're waiting for it to keep going down, just like they did the last time, and the time for that, and the time for that. So the volume isn't there. So that means as a currency trading house, you're taking a big chunk of risk. So if I say to you, you're my market maker, I'm the pension fund, or I'm the insurance company, and you're the poor guy at Citadel that I pick the phone up to and say, hey, listen, I need to dump 100, I need to dump $1 billion worth of positions, and I want you to take 100 million out of my Bitcoin holdings. You're either going to wear that risk as a trader, in which case you're about to get your P45, whatever the American equivalent thereof. You're going to get sacked because the
Hmm.
minute your risk manager finds out what you've done, you're sacked. Um, or you're going to move the market massively by having direct impact on the market.
Hmm.
So there's no way you're going to want to make a real market in US dollar to Bitcoin. It's not liquid enough. There's not enough depth in the market.